Hi, Catalina here from LoanSense. We're going to be talking about using it's the second week of the biggest slowdown in the mortgage market since this pandemic hit. And I want to take some time to talk about how to pull through more purchase loans because I think that's really, really important in this time, how to not allow good loans to die and to be more effective at pull through, as well as to use this time to build strategies and ways to nurture your consumer so that you're not just looking for loans ready to originate today. Like the ideal customer, right, has a purchase contract they're about to sign, who's ready to move forward. But it's really vital in this climate to pinpoint consumers who may not be ready today, but could use a little hand holding and will be ready in a month, 2 months, 3 months, 4 months. And also, if they're not ready today, how to consider nurturing them for pull through. So this first article is really interesting because it's a friend of mine, I know him, who talks about, the down payment assistance program, but it talks about the number one problem with consumers right now is lack of down payment savings. Second reason of high turn down is high debt to income. So between these two reasons, like almost 60% of declines are happening. From this report, it says 33% of the applications could be salvaged if you give consumers access to a good down payment assistance program. I'm not sure exactly where he gets the 33%, but at LoanSense, we've done turn down analyses to show that 25% or so of all high DTI turn downs are driven by student loan debt. So we know that for sure from specific lender turn down, right? So top two problems, lack of down payment savings and high DTI. So how can you save that? Of course, giving people access and resources to down payment assistance is important, but also allowing people to understand what actions they need to take to improve their debt to income or whatever issues they're having so that they can close, right? So the example of this article is specific people who, based on their employer and based on their income and various things, they could qualify for everything from what it's called here, like a second silent mortgage to basically cash money for if they're a primary buyer, right? To grant programs, to all kinds of different things. So different states have different programs. I'm sure you can go explore down payment assistance, down payment resources, sorry. They have all types of programs, right? So I want to point that out. That's one way of recovering loans. Another way, of course, is systematically addressing what's driving their reason for decline. So if the HMDA reason is high debt to income, how could you look at their debt and help them create a plan, right? With student loans, they can get it adjusted in 21 days. That can't be done with every other form of debt. So I want to talk about that. Another thing I wanted to talk about is an article here that talks about how to pull through loans. I don't know if I clicked too far here, but one second. Where did the article go? It talked about, here, the article talked about, really important, talked about how to, talked about a little bit about online data, marketing data, how we went from reactive, like using data to react, to using data to proactively deal with different loans, right? So I would put us under that. After proactive comes prescriptive and then predictive, right? Analytics. So we want to move away from reactive to proactive and then prescriptive to predictive. I would say the mortgage industry is more on reactive and very reactive, and now we need to move to proactive, okay? So what does it mean to be proactive with your analytics? I can't find the article, so I'm just going to speak directly to you. What does it mean to be proactive? Yes, I can't find that article. right now, but I read through it. So let me just go over this. I will enlarge in my screen. Being proactive means that we want to try to find, being proactive with our data means we correlate a consumer who's likely to buy with specific behavior, and we target them based on that behavior ahead of putting in a mortgage application so that we can be the lender top of mind by the time they want to react, which is, I want to buy a home now, right? So that can mean everything from first-time home buyer groups or asking questions, all the way to they engage with some type of financial professional and they haven't bought yet, all the way to kind of like what Rocket Mortgage Quicken Loans strategy was to buy True Bill, because a huge amount of their users say they want to buy a house at some point, right? That's proactive. That's acquiring and getting the consumer's attention ahead of their intent to buy. The reason that's so important is because it establishes the lender as a brand imprint in the mind of the consumer ahead of the purchase decision. Okay? That's really important, because if you can imprint your brand in the mind of the consumer, as well as let the consumer know you're interested in their well-being and interested in them getting educated about the home buying process, then by the time they put in the contract, when the realtor asks them, do you have a lender, they'll already say yes. They have somebody in mind, right? Versus if they don't have somebody in mind, they'll likely just go with whomever the realtor is recommending, which is fine if you're that person. But if you're not that person, then it's better to get in front of them ahead of time. And also gives you power in a relationship when you can also send the realtor leads, right? So it creates a balance of power for your lending organization, but it also allows you to get in front of the consumer ahead of the realtor and nurture that consumer ahead of the buy of the purchase decision, and be top of mind when that purchase decision happens. So what are some of these techniques? Some of these techniques include niching down your marketing to address specific groups of people. Let's say for us, it's student loan borrowers. But for you, it might be, divorced women, or that's a strange niche. I guess it is a niche. Divorced women, or veterans, or whatever the niche is, right? We call it a niche not because it's a small group, but because it allows you to understand exactly who the consumer is and helps you think about how do you map out the journey. Like, what is the daily habits of such consumer and where can you find them? Are they in, divorce support groups? Are they in, I don't know, veteran Facebook groups? Are they in whatever their group is, or whatever their affiliation, social place, or where they may gather online, in person, etc., is where you can go proactively educate borrowers, that type of borrower ahead of the purchase decision. In our case, student loan borrowers, like helping them address and understand student loan debt and giving even educational webinars on such topic will really make you top of mind when it is time for them to purchase, right? So these are examples of ways to not just be proactive with marketing, but to think about how to get in front of the consumer ahead of the purchase decision, and using this time, this difficult time in our market, to create email nurture campaigns, text nurture campaigns, or different various campaigns to nurture these consumers ahead of the buy process will set you apart no matter what the economic cycle or the interest rate is. As they say, right? You date the interest rate and you marry the home. So convey that to consumers. Like, mortgage rates are still lower than inflation, thereby your mortgage rate is actually negative. And the interest rate is temporary. You will refinance down the line, but the time to buy your dream home is really dependent on the right time for each of us as individuals. It's not dependent on the interest rate, right? The interest rate could be 2%, but if you're not ready to buy financially, emotionally, or in a position in your life because of your employment, etc., then it's just not the time, right? So that's what I like to talk to consumers about But I also think it's vital for us as lenders to reframe the conversation and to rethink of how to proactively get consumers up the pipeline of their buy decision and not just try to find them when they're ready to buy, which is much harder and much more competitive and costly. So I hope this video was helpful. Comment, like, share with those that you think this would be relevant to. And of course, we have an entire marketing library to talk to student loan borrowers if you're interested. And of course, we will link below to our demo calendar to book a time at any point if you are a lender. We would love to show you how we can help you save more loans, make more money, and increase the purchasing power of consumers coming through. We grow your top line revenue. Let us know if you'd like to learn more. Our website again, myloansense.com. Have a good rest of your day.